I'm asking this question in relation to the facility you opened in Kisumu. How big a deal will it be in terms of meeting the region's supply?
So it's going to produce about 1 million hectolitres of beer when it's at its full capacity. So a hectolitre is 2 barrels, and you get around 300 mugs out of each barrel. So 1 million hectolitres is a lot of volume. The beauty of that site is it's a 55-acre site, and the production facility that produces that 1 million hectolitres only takes up a proportion of the site. So there's plenty of room for expansion. I'd love to get that facility full and produce more, but right now we've got the potential to take a 3 million hectolitre business from the Nairobi plant and make it 4 million hectolitres. So lots and lots of potential for growth, and more importantly, lots and lots of potential to ask more farmers to grow more sorghum. Last year we redistributed around 1 billion shillings worth of wealth back to farmers through sorghum production. Over the next couple of years that will rise fourfold to 4 billion shillings, and that's really what gets us out of bed in the morning. Redistributing value and wealth back into communities through this special relationship is very, very powerful for Kenya.
Interesting. And let's shift gears a bit and look at the pricing of products. Of course, there's been a tax issue that did come up when you look at the budget statement. And this, to an extent, has seen a number of distributors and manufacturers, of course, hiking up the prices. How will this impact on consumption from your view?
Well, I mean, firstly, excise is, important to Treasury. We're the second largest contributor of taxes to the government. Around $500 million goes into government from us. We're 1% of GDP, we're 5% of any individual annual plan. And so we recognise that comes with responsibility. The sweet spot is to have enough of an adult conversation with government, and we're able to do that, so that we take sensible tax increases with sensible time gaps. And so whilst an excise increase is always difficult to manage, it's a function of doing business in this marketplace and the role that EABL plays. 5.2% isn't a disaster, it's in line with inflation. We would prefer it to be every other year rather than every year, because our research suggests that that's what Kenyans can cope with. And we'll be very careful in how we pass that price on.
So this won't have a big impact to the consumers eventually?
I think, well, with the middleman, the government have instructed us to charge more excise to our consumers of our drinks, and therefore we will do. And we will try hard to make sure that that doesn't take our drinks out of reach. The beauty of our portfolio is we've got beer and spirits brands from 30 shillings all the way up to hundreds and hundreds of dollars, and so our goal is to have price points that everybody can access, whether you're wealthy or whether you're not wealthy.
All right. And as we head to wrap up this interview, Andrew, I'd like to just pick your mind on what do you anticipate in terms of the growth projections now that we've seen a sterling performance in the first half. What are your views on the next half?
Well, I mean, we've got a very clear growth strategy, and F20 exceeded that very clear growth strategy. So please don't expect sort of 12 double-digit % growth year in, year out. We don't think that's the rate of growth of this marketplace. We do think that there's good growth to be had. All of the demographic factors and environmental factors would suggest that there is that growth available to us, and we're alive to the fact that there's general elections coming up. We're susceptible to other environmental issues, and so we have a healthy dose of conservatism within our strategy to make sure that we can always deliver what we promise we will. All
right. And I just want to get your parting shot around, there's been the crackdown on counterfeits by the government, and of course the various players in the market have been losing quite a fortune, if you ask me. From where you sit, how big an issue is this, and as a company, any mediation that could be in the pipeline?
We believe that around 50% of beverage alcohol consumed in this marketplace is illicit, and that's not good because it's dangerous. You know, we have very, very high production standards to make sure our drinks are high quality and safe and healthy. You can't do that with illicit, so it's dangerous to people's health. The second thing is it's conning Kenya, because there's no excise attached to that, so that's doing nothing to help build the economy and support the farmers that I've just talked about, etc. And the third thing is, players like ourselves are paying our taxes and playing the role we play, we miss out on sales. And so it's lose, lose, lose. And so we welcome the government enforcing the law as assertively as they have done.
All right. Thank you, Andrew, for your time. I wish you all the best in the next financial cycle.
Thank you very much.
All right.
All right, time now for the market analysis on this week's episode of The Trading Bell. Why don't we take a look at the numbers coming out of the bourse this week right now. Of course, you can compare those to the numbers last week and see some differences. We've got our movers, gainers, losers, as well as some changes in the NSE 20 share index that you noted there. But for now, let's take a look at Markets 101. All right, you know, they do say there are a lot of valuable lessons in the past, so why don't we take a look at this week's NSE Historical Fact. Okay, so in this week's episode of The Trading Bell, Abby Agina was speaking to Andrew Cohen, the Group Managing Director and CEO of EABL. And of course, what an intriguing conversation that truly was. But we've got lots in store coming up on our next episode of The Trading Bell, so make sure you keep up with us. Take a look at our social media pages that are appearing on your screen right now and stay up to date with everything NSE as well as the money markets. I'm Malika Kazia. Catch you next time.